All right, hey everyone, it's John again here today with two of probably our most veteran media buyers in the industry, Kenny Shay and Charles Flagle. Charles, you've been in the business since what, 2013, and Kenny, 2007, right?
2008.
2008. Okay.
Either
Oh,
way,
perfect.
it's been a good run.
All right. So obviously a ton has changed in acquisition and media buying since you guys came in. So I thought it'd be cool to kind of start with let's talk about what those big changes are, then get into what's working these days, both in terms of thematics, sources, like what do you have to do to make it work today, and then kind of where you guys see things are going. And so like, I don't want to make a huge amount of comparisons to 2008 because obviously it's a very different environment, but like this is probably our first bad market, like extended bad market since 2008. I mean, do you remember how things were back then?
Yeah, I do. Kind of coming in then was a good timing wise, right? And kind of prepares you for this. You've seen almost that full cycle. And yeah, you can draw a lot of correlations there, with the environment to what it is now. Yeah. So, I mean, Chuck, you've kind of seen small, like similar, but kind of on smaller scales, correct?
Yeah, I would say on significantly smaller scales.
Yeah.
It's been pretty much like I came in and people were still like afraid after 2008. In 2013, like MMP had a great Obamacare promo and Jim Rickard's promo that did, a couple 100,000 subs, and that kind of thing was still working. So it was before that really went away.
Yeah. I think about like, I remember when I was working with Clayton Makepeace back then, the late Clayton Makepeace, unfortunately. And he had this promo that did 15 million in the worst of 2009. Like it was like in March, which is at the bottom. And it did 15 million because it was the $1 million contrarian portfolio. So theoretically it was going to have a mechanism to short the market, which was close to the bottom of the market. So maybe not timed well from a investing standpoint, but from a promo standpoint, like I think that's one thing that I always kind of hold on to, is that even like that was like probably the worst, bloodiest, most severe traumatic market experience that you could go through. And people were buying like crazy if they felt like you had something that would help them navigate the fear. And then like over the next couple of years, we had things like, End of America come out in 2010. You can tell me if I'm full of shit, but like I've always had this kind of model in my head about how like when the markets tank, media tanks, so spend tanks over 6 to 12 months, that brings media costs down normally. And then we usually have a big promo afterwards because now the costs are a little bit lower, there's less competition, and now somebody comes up with the right message, and then you have like an End of America. So it's hard to prove that, but that's kind of like the model that I've had when markets tank. Do you think you see stuff like that?
I can see that for sure. I don't know that prices have, maybe prices have dropped a little bit over the last year or so, but not significantly. They also haven't gone up significantly. So,
well, I think that to me, that to me seems like one of the bigger changes from now from 2008 is that like prices didn't go down when the market tanked, because I think a bunch of reasons, but like the media cycle is different, the click competition is different. And so like prices haven't gone down, but conversion has, right?
Yeah, definitely. Maybe we saw a little dip, early summer, but for me, lead costs and acquisitions have been harder to come by, and costs have kind of gradually been continuing to increase. I have seen much less on the front of like competition. If you're looking at what other people are spending, and typically when you see that, lead costs come down, there's definitely less spending going on, which, normally you would think would, demand would help me with prices, but it really hasn't. I think that's been the most interesting for me in the last.
Why do you think that is?
Yeah, so I mean, I have a theory on this. Anytime there's any sort of turbulence, whoever is sort of controlling, who has the knobs and levers and has the most power in the relationship, with auctions like ad networks, can sort of artificially raise the prices. And I've seen it like undoubtedly before. I think definitely a lot of that has gone on.
So this brings me in an inflationary environment. Like I remember this is something that Charles Mizrahi, who I bring up a lot on these, taught me when I worked with him years ago, was that in the 70s, Buffett beat the market by like 600% or something like that, because he was buying things that had pricing power, and it was things like advertising agencies and things that could basically, or price elasticity. And so, I mean, do you think that's what it is as like that the ad networks are basically saying, hey, inflation is a problem and we are keeping we're just adjusting the prices to keep up with inflation in terms of their own bottom line to some degree? Or they're just like, there's less spend, we can keep our margins good?
Yeah, I think it probably has to do with inflation, also privacy concerns, and to whatever extent that hurts their ability to help the advertisers successfully buy media.
Yeah. Do you think like with YouTube, like YouTube there was a period there where YouTube was just like the place to be, it seemed like. That's obviously like all ad cycles do that, where like it's cheap, more people pile in, the prices go up, and the price, so we're in that later stage now. Do you think YouTube is like, they're also selling a subscription model now?
Yeah.
Too. Do you think like you're starting to see, because I worry about that with the big networks like switching over to subscription models, starting to compete with their own advertisers? Amazon did it obviously to all of their retailers, and I would think that that's definitely an option for like a YouTube.
Yeah, I don't like, I still love YouTube, running ads on YouTube, but and watching it, but I would say that it's a different kind of product to what I think a lot of us, at least who are like have been in this industry for a long time. I do see trading and stuff like that on YouTube, but like I would love to see like, Porter Stansberry come out with a paid YouTube subscription or something like that. Like I'd pay for that, but I just haven't seen that yet. And I think a lot of our subs are pretty heavy readers as well. And so like what I'll end up, what shakes out for me in terms of advertising on YouTube versus advertising on, say, Google Display Network is you get a significantly higher quality lead from Google Display Network, but not necessarily a better conversion rate to the promo. And so what I'm saying there is that, maybe these people who are watching YouTube all day aren't reading the newsletter, and the people who actually read my landing pages and ads and do end up reading. I don't know, but there is it's like a 300% difference or something in the quality of the lead that comes from each of those channels.
300% difference?
Well, yeah, so like I'm running YouTube right now after 30 days, not including what they bought on day 0. So just in my email list, they're worth about $2. My GDN leads are worth about $5.
Okay.
So yeah, just off CPA from the email list.
Right. And so that makes sense in the sense of like at least the theory that you have of, so if you come from a written ad and you go to a written product, we know you consume content in that format. Whereas going from a YouTube ad to a written product, maybe you don't consume as much, so you're not as valuable.
Yeah, I have no idea. It could also be that YouTube is a ton of mobile traffic. It's just a theory. But it's the biggest difference I would say that I've seen in lead quality since running like you know, like really contrarian end of the world stuff on Facebook.
Yeah. And Kenny, you like with, I know your history, you spent, I feel like, more time on the trader education and trading tools and trading side than like the investment newsletter side, right?
Correct. Yeah, we more of the tools, exactly. You know, a lot of kind of algorithmic indicators, a lot of, you know, options education, very entry level. And I, you know, so on the flip side of that, I had much less success with the YouTubes, with YouTube, and that sounded like my dad right there with the YouTubes. But I have a lot of success with the Google kind of search ads. And that's where I've done very well by staying very targeted, you know, keeping, you know, my keywords very, very in line with what we had to offer. And, you know, that it's also really, you can also kind of see how the bids go up there and what you're paying more. So keeping an eye on that was very interesting through all of this, to see, you know, there's still the same amount of interest in things, but the bids are kind of inching up there. And, you know, the traffic there has continued to be good for me. So what I've been doing is looking for ways to kind of offset my lead cost by partnering up with another good organization that has good traffic. And I think Chuck and I have both been doing that for a while. And that's been one way to really help, because I mean, ultimately a buyer is a buyer, right? So if you know, if I can, instead of kind of putting my stuff together with an offer behind it that doesn't really, you know, make a ton of sense, if I can pay for really targeted traffic, and then I have two offers that are looking for that same traffic, you know, we can cut our lead costs in half, and both of us are ultimately going to do well with a better lead than a less qualified lead. I think, Chuck, you're kind of doing something similar to that, right?
Yeah, I mean, at this point, you know, we talk about rising costs and stuff. Yeah, for the last, I don't know, almost 2 years, I've been doing what we used to call it money map co-branding, which is basically like, you know, a legacy lead mark, or, you know, maybe a Stansberry. I'll run their promo, and on the landing page itself, I'll have a little checkbox or a disclaimer that says you're also going to receive, or this is sponsored by X company, and it's basically co-reg for them, but it's pretty much necessary, I would say, at this point. I'm trying to get away from it, but we can talk about that later.
Well, yeah, but so just for anyone who's not clear on what this is, you're basically subsidizing the cost of the media by selling the lead as it comes in to a partner so you're selling in your active funnel. Mm-hmm. An additional spot where like you'll co-brand it, and someone will see a page and it'll say, it's, you know, here's Charles's amazing offer, and you're also going to get Kenny's amazing offer. So the privacy concerns, everything's covered on that first page, and you're both applying the cost to that, so it cuts the cost for both of you. How do you guys find that works on how does that impact conversion and sales for each partner?
So there's different ways to do it, right? I mean, you can have very little text about what the other offers are on that page, and, you know, basically it's in fine print at the bottom, and then the user has no idea they're getting signed up for the other offers. Or you can do it in more of a collaborative kind of way, where you have two offers very prominently on the page, multiple touch points for the different partners there. And in that case, which is what I've kind of specialized in, we haven't, you know, those leads we do as well, or we do better with, than if I was paying on full freight on that lead, right? So if I can subsidize it with someone else with a similar offer, I'm going to do better ROI wise over the next 30, 60, 90 days. And that trajectory has been kind of the same. Also, it allows me to kind of use their data as well to really target, really get in there and make sure that, you know, I'm targeting the best leads and staying on it. Chuck?
Yeah, I agree with that totally. Having the extra data points, so like if somebody purchases from, say, Stansberry on their list, and I can pump that into my stats, then it gives us extra mechanisms to optimize with. I will say, and what Kenny said is exactly right. Like, that's how, you know, I'm working with one partner, and, you know, generally I'll sell co-reg leads for $3, $4. And with this one partner, within a month, they're at 950. And it's just from doing things like what Kenny was saying, and also getting a little bit more granular with how I'm targeting and getting those leads over there. One thing that I will say is, there are diminishing returns with each list that this person goes on to in that sort of funnel. So I don't know about sweeps. I know a lot of people are doing sweeps these days.
A sweep, for anyone who doesn't know what a sweep is essentially you're on one list and we're going to just put you on another list from our company, or we're just going to put you over there. Maybe do a negative opt out where you get an email that says, if you don't opt out of this other thing, then you're going to get this other e-letter. And so all of a sudden somebody opted into one, now they're getting 3 to 5 other emails. And there's a lot of debate around that practice.
Yeah. And so like I as I told you before, I'm really proud of like the tracking and stuff that I've set up. And so I'm able to track all of that, except I've never done a sweep. So I don't, I have no data on that. But I do know for certain that there are diminishing returns. It's just it's an economics question. Does the amount that you're being paid outweigh the amount that you're missing? And then there is a time period that you have to look at as well. Whereas like, no, after a month, getting paid for this co-branded lead is worth significantly more than if I didn't do it. But after 9 months, maybe it's a different story. And then it's like a cash flow thing. So, it's just about what publishers are willing to do. And I think that there are ways to do those kinds of things smartly. I mean, that's, Kenny and I have talked about this before, like, as opposed to like blindly sweeping or blindly selling somebody a co-reg lead, you make it very with intent. I don't know what I should say, but like purposeful. You're not just getting my e-letter and then randomly going on this other dude's e-letter. You're getting a subscription to these e-letters. And so I'm very like, I have an editorial staff, and I'm very big on that sort of customer experience, and I've seen it pay off. So
that makes sense. And so like you would have a primary kind of the primary buyer, primary funnel that comes in, and does that one have priority, or do you kind of do it side by side? Do you do like, have you done things where it's like, hey, the front end is kind of a collaborative piece for both people, and then so like maybe a guru A and B do a webinar together, and then both people have the lead, so that the relationship is built right away? Or what are the different ways that you've handled that front end piece?
I mean, we've kind of just played with it, right? I mean, you just on the landing pages, you put one offer first, you put the other one second, see how that's doing, flip it around, check out the touch points on the thank you, check out the different touch points, just play with it until you get the what you're looking for.
Okay, nice. And so it's just another thing to optimize on that front end piece and just see what works.
Yeah, yeah, and I would also say it's like akin to the one big idea thing. Like you don't really know, what's better or worse. It's sort of a moot thing. It depends on the pairing that you're doing, and maybe the offer that the other person has, or maybe the branding of your list and the branding of theirs, which I hate even talking about, but that's a factor. And it's maybe a minuscule one, but it just kind of goes to show that there are a lot of variables that can change things.
Yeah. And so like that subsidized, I mean, is the volume still there, or are we working with much less volume? I mean, something's not the same, obviously. So even if you subsidize the cost of acquisition, back-end conversions are not where they were. Total conversion isn't where it was. It's not dead, but it's not where it was, obviously, during the COVID boom. Like, is the volume like where in this funnel, where in this process anymore do you think like the lower performance is coming from overall for a publishing business as a whole? So like I think of it this way, like, okay, so is is there the enough volume? Is the volume on the front end clicks the same, but it's higher cost? But you can get the same volume, but then you can't convert as many people to back end sales, and so that brings your overall ROI down? Or is it I can keep my conversions relatively stable, but I can't get enough new people in the door right now because there's not enough interest? Or is it I can get people in the door and it's just really expensive and I can convert them, and so the total ROI is down? Like, how would you characterize that from front to back end, and where like the fall off is, where the lack of engagement is? Is it just everything is down?
I mean, what's that saying? There's no solutions, only trade-offs, right? So
Yeah.
there's always going to be something that drops a little bit. But out of in this specifically, these conditions, I mean, it's a necessity in my mind. It's a necessity because, you can take your budget and you can just go after a less targeted, you can go after a lead with less intent, or you can kind of partner up and, pay the money for that, or not partner up, just pay the money for that bigger lead. But like you said, you're going to, no matter what, you're making less conversions on the back end right now. So if you can subsidize that, with somebody else who has a quality product and also understands that you need that quality lead and not just that lower intent, I mean, again, it's just kind of out of necessity. In my mind, it's out of necessity right now. I mean, I don't know if anybody else is finding a way to really monetize that top dollar traffic right now, but I'm not seeing it.
Yeah, and I agree with that. It is like, I'm still getting leads around the same price, maybe actually cheaper, but the people aren't buying. And I think that there are different degrees of trust for each level of product, you know what I mean? And so like, one thing that I worry about all the time with doing co-reg and a lot of the sweeps going around is like, well, are we hurting that trust on the e-letter side? And that's why I'm like, I do want to like get out of that. Maybe I'll lean into co-reg, but just in like a high quality aspect. But I just worry that the experience that we're giving off is turning people away from the industry.
Right.
Yeah.
Yeah, I agree. Definitely. I mean, when you're throwing 5 offers at someone on one sign up, I don't think that's healthy at all. But if you can, again, if the quality is there, and if it's something that user would probably find on their own, or maybe is already on these lists or similar lists, I personally don't think you're hurting that, as long as, again, it's a very clear way that you're laying that out, and it's something that they're definitely interested by a similar offer. I know some people in the past, it's been kind of that famine mentality where, I don't want to put my offer next to somebody else's, they're going to buy theirs or mine. I don't think that either. I think a buyer is a buyer. I think, if you can get that high quality traffic in, I think, you're going to be better off going after that super targeted lead with someone with a similar offer.
Yeah, I think that's true. I think that's like, there's that basic direct response principle of recency being the greatest predictor of a second sale. So if somebody buys, like, you could have 100 people in the room, but the 10 people who bought something are the most likely to buy something on your next offer. And what I think a lot of people from, I think Joe Schriefer, Brad Holmes, like, we've all like seen this, and you guys, like, we've seen this now, if you've been around long enough, that like that recency effect happens even if they buy on someone else's list.
Yeah, it's brand agnostic for sure. I mean, maybe there's a little bit of a sway there, but yeah, if somebody buys, I don't know, James Altucher crypto, that they're still way more likely to buy, a Tom Gentile backend or something like that.
Right. It's kind of like, I think one good metaphor that I've heard is, it's kind of like this guy's hobby is fishing, and he stops buying stuff for fishing for 2 years. And then all of a sudden he sees this new rod that he has to have. And once he buys that rod, he's going to start buying a bunch of other fishing equipment. Yeah. And so that recency factor, like, I like the way you phrase that, it's brand agnostic. And so, I mean, anyone who's experienced in the business and has done enough stuff knows that kind of aspect is there, and it doesn't really degrade your offer to have somebody else making an offer. Although intuitively, like, I totally get, like, it's really hard to, until you've looked at the numbers on that, it's really hard to accept that idea.
Yeah, totally. And, like a rising tide lifts all boats, man. It really does. Like, partnerships are almost always a good thing. And I think that, you have to put the customer first. So like, you have somebody who buys a front end, they're putting their trust in you after seeing this 50-minute long video. And let's say you automatically put them onto 10 lists or something like that. Like, they're not going to know what the hell they just bought. Seriously, they won't. And on top of that, they may end up being like, wait a second, like, this is garbage. This isn't for me. Like, I no longer want to be in this whole thing or in this hobby or whatever it may be.
Yeah. One sec, sorry. So two things that jump out to me, like the idea of collaboration. You go back to 2008 to 2010, collaboration was everything in the sense of the affiliate networks. 1 second, guys, I'm sorry.
Okay.
Man. The affiliate networks were basically driving a ton of sales in the trader education space. Like, very few people were actually doing active acquisition externally at that point in the trader side. Like, I know the Agora world, that was like pre-FMS. Like, those two worlds were kind of separate in a lot of ways. But that's reminiscent of what we're seeing now. Whereas like on the acquisition side, the external acquisition side, everybody I know who has acquisition moving seems to be doing some version of a collaborative buy. It's like I don't know anyone who's just buying on their own
Totally
at scale.
Totally. And I was going to say, I even have been seeing it lately with the MarketWise companies co-branding front ends, which is something that I've always wanted to like do. We kind of did it at MMP between pubs, and it was wonderful. But I've always wanted to see brands do that. I love that.
Yeah. And then the other thing is, you keep bringing up the phrase trust, the customer's trust. And that reminds me of, again, going back to that period when like nobody trusts anything. The things that were selling, because I know we could see it, because there was like the things that were really selling were usually like real money track records, people who could show. And I know there's a lot of issues with that now in an FCC environment, but the point is that like when you see somebody's real money track record, you see them actually trading and making money, that level of like confidence and trust in what you're going to get from them goes way up. And so have you seen anything these days that is like, who's doing a good job about building trust and building like confidence into their promos right now?
I have a couple of theories. So I do want to say that Empire, some of Legacies, and then all of Stansberry's, all of their front ends have within the headline some sort of like a title, PhD economist says, blah, blah, blah. And so there's that for sort of credibility. But also, I have some friends in the industry who are heavy on telesales and live webinars. Mm-hmm. And it seems to be crushing. Like, these are companies who are growing still. You know what I mean? And I think that there's something to like maybe the telesales guys being their concierge, or maybe the fact that the guru's live and makes bad trades sometimes, but also good trades, and helps people think of their losses in maybe a less detrimental way.
Yeah, it makes it feel more like this is actually just how it is. Like, that's the great thing about video, is the relationship building is much higher than it written, I feel like, too. Actually,
that's another good point. I'm sorry if I'm cutting you guys off, no. But Empire, Jenny over there and Mark, they're geniuses. They have to spend media like everybody else. These guys have figured out how to get co-reg to work better than going straight to sale, or even doing lead gen on networks, which, there are a lot of variables involved in that. But I think that could also have something to do with the fact that you're establishing trust with the email series before making the sale. I'm not saying that's the move or anything like that, but I had lunch with them the other day, and we were talking about it.
So they're having good luck with like a gauntlet, like the traditional gauntlet series, but like
Yeah.
upgraded. Is it video? Is it written? Is it?
Yeah, no, it's written and it's just really high quality editorial. I think that their gurus, Whitney Tilson's very credible. That probably lends something to it. And on top of that, their promos are, they're not very gimmicky unless you consider the fact that the guru has credibility of gimmick. I don't know.
Right. Yeah, I can see that. So they spend time selling the relationship essentially before going straight to the sale, which is counterintuitive because usually, you have that time decay where somebody comes in, they see an offer, and if they don't make an offer, if you don't get an offer in front of them right away, then you have every day that goes by, you're going to have a lower and lower ROI. This is really how we think of it, right? So you're saying that they don't, do they have an offer coming in right away, or do they just have an offer that's just one time and then they have an email sequence? Or
no, I mean they have ads throughout their editorial. It's a pretty standard gauntlet, which is why I'm saying like it's not even like maybe they are doing something super special, but it's like a maybe just something that shows like, okay, they want you to take them out to dinner, before they.
That's like philosophically, there's two types of marketers that I see in this kind of a scenario. That one is really the whole thing is, how sophisticated can I make this funnel, right, from a technical standpoint, to make sure that I capture every last dollar. And they get really aggressive with offers and upsells, downsells, it's about the sophistication of the funnel. And then the other one is, and I think this is what you're implying that they're doing right now, is we're really going to make the quality of the content and the experience that they have as high as possible. And we're going to try and just actually engage the customer from the editorial standpoint and the promotional standpoint, in a much stronger way. Would that be a fair assessment of what you think is going on
with them? Absolutely. Yeah. I mean, yeah.
And I'm agnostic as to which of those two is better in a lot of scenarios. I do think that the second one builds a better business. In a better relationship.
And I would say it also depends on what people are signing up for and how they're signing up. If someone's already being sweeped all over the place, maybe you're like hand fisting them with offers is the best thing to do. Whereas if somebody signs up for a report from one of my lists, then I'm going to give them that report and I'm going to show them that like we're a real company, and also pepper in some offers.
Yeah. And then Kenny, do you think do you see a lot of indicator offers right now? Because I've heard several people mention these days that like some of their indicator promos are actually working really well. Is that something you guys are seeing?
I just completely cut out for a second. Can you say that one more time?
I was saying I've heard from several people that like indicator offers, indicator products seem to be working better than a lot of other things right now. Have you seen that? Or do you not have a lot out there right now? Or
I mean, it's tough. I think, everyone is kind of looking for that low bar, tell me exactly kind of what to do thing right now. I can't really speak to that a whole lot, but I could see how that could potentially be the case right now.
Yeah. So where do you guys see, like, how about that? Like, what do you think's working out there right now? Like, like what are the thematics? What are the types of offers that seem to be getting better attention than others?
I mean, again, I think it's a tough space right now. Nothing jumps out as to completely crushing it right now.
Right. There's no 5G going on right now. There's no like crypto thing going on other than the wonderful debacle of FTX that we get to see unfold. But
I see a lot of energy stuff working and going both ways. Like, Porter & Co. Has a fear-based energy offer. Then there's the Bill Bonner one that's selling Steve Sugarroot's product that are both doing or I shouldn't say they're both doing well. I don't know how the Porter and Co one is doing. And then there's like the liquid energy from Legacy that's doing okay. There's another one from a new pub that we have that's very greedy and it's about energy.
Yeah.
And then, you know, like we still have Banyan stuff. You know, I say this like every time we talk, but like, you know, they have good stuff. Like they have a great battery promo. They have a great biotech promo. And, you know, they're another pub. Like I think that their copy definitely talks more about the guru and the service than other promos I see. So maybe that's why. Yeah.
But that's interesting though. That so you have like, you mentioned several types of energy promos. You mentioned batteries, so that's commodities. It seems that, and I've heard this from other people. I know Angel Publishing mentioned Jason over there. Hey, Jason, if you're listening. He mentioned that energy and commodities and resources seem to be the things that have been working for them as well recently. So those are traditionally like you say that headline, and I can tell. I mean, I'm just assuming when you say liquid energy, oh, it's a stock story.
Yeah, absolutely. It's a $4 stock. It's high. I think it's hydrogen.
Yeah, which we did not during like this last like, you know, big bull market. Like we didn't get a lot of stock story. There was a period of time where there was stock stories, but like the late stage, it wasn't a lot of stock stories. I don't feel like. We had a huge systems promos period with like the X pattern and this and that. Then you had like the other than 5G was kind of a market story. So you have like these market theses. And then there was another like liquid metal or something one that worked, I remember. But like stock story promos on the front end weren't as common, were they?
I'm trying to think. I mean, MMP, we had a solar promo that was like one of my favorite promos to ever run. I mean, it really did great, and the leads were great from it. We had a VR promo, which was a stock story promo. But yeah, I mean, I guess you're right. I don't know why that is though.
I mean, I don't know. I think it's a harder. I think stock story promos are harder to write to get a winner with.
Yeah.
But it could just be the difference in the market. Like, I mean, I feel like resource stuff has been like lining up quite a bit lately, and a resource promo is almost always going to be about a stock.
Yeah, I forgot to mention Stansberry has a gold offer out. That's doing great for me. And then recently I've been hearing about these guys who do the gold IRA stuff having their best years ever. So one of them, I don't want to say who, but is going to hit $1 billion this year. Had a month of something like 300 million in October. So
wow.
Yeah, I mean, I'm you know,
and that's for people. That's $1 billion in gold. That their revenue is going to be off the differential between that and spot, whatever they sell it at or whatever. It's not going to be like they took $1 billion themselves on. Like it's most of that money goes to the actual gold, right?
Yeah, I think it's a management play. I think. Yeah, you're right. It's not like it's not like publishing.
Yeah.
Still, though, the fact that they're having their best year ever, I think, goes to show. Yeah.
Yeah, and I think that's another thing those are fear. Like gold is always a fear promo at its essence, right? Like it's like the pre-crypto bet against the system.
Yeah, totally. It's a hedge against. It's the anti-dollar kind of thing. Yeah.
Yeah, and then like crypto. I mean, with the FTX, I wonder if that's going to bring gold back a little bit more, just because like the whole thing with crypto is that it's supposed to be, you know, the bet against the system, and like it's decentralized and it's safe and it's this and that, and now FTX is like the greatest fraud of all time. And you know, that's after several crypto winters, and is that going to drive people's, you know, back towards like a flight to safety? When they think of flight to safety, they're going to go back to gold, or they're going to go back to, you know, what? But anyway, that's kind of an aside. What about the trading side? Or go ahead.
Yeah, I just want to throw something else in that popped into my head. And so I don't do any IR. I just haven't like dipped my toes into it yet. And I don't know if I will, but I do see it all over the place. And the IR that I see is lithium, like copper, it's like all these commodities as well. And, I was always told like budgets dry up for publishing, budgets also dry up for IR, in fact, maybe even faster. And maybe that's true, except for in these commodity spaces where like, where people are invested. Yeah.
So like from my conversations with people, I've seen like a ton of people in the IR space are like budgets are like way down. There are some spots like in the Reg A, like the private market side that they're down, but they're not like frozen because it's not correlated to the market directly. But then like IR started with like biotech and mining and resources, because those are two businesses where you have to raise a bunch of capital before you ever make money. And so they were always desperate to raise money. And so that's where a lot of the kind of the, marketing to retail investors through direct mail and things started, was actually in the mining space and the biotech space. And they haven't had a market to raise money in for, biotech has, but resources has not until very recently again. And so like, it's like, this is their time to shine, I think, when it comes to raising. So they're probably the one group that can get budgets easier than a lot of other ones. But I'm not really an expert in IR the way that I used to be when I used to pay attention to it more. But that is an interesting thing to keep track of, is which actual companies, because if you can see that, like if they're getting a lot of ads for a company, like, they're not, those companies are, what are they looking for? They're looking for volume. They're looking for someone to actually invest. And so if they're spending a lot and they're showing up everywhere, that means that people are actually investing in those things. So that's probably a pretty good idea for promo.
Yeah, totally. John, that is such a good point. The more I've worked like outside of Money Map, and I don't know if it was Money Map's culture at the time to sort of be aware of all this stuff, but I realized that like nobody's looking at what, you know what I mean? Like I just don't know sometimes what people are thinking when they put stuff out, but for sure, like if I start seeing copper stuff everywhere, I'm going to figure out how to make copper sexy and at least run some lead gen on it and try to figure something out. There are so many. I feel like I'm running a boot camp or something every time I do these calls, because I'm always like, everybody needs to be looking at this and testing things. But it's true. Like, I think that we had a boon with COVID and over the last couple of years and all that. And people got lazy and stopped. They picked up bad habits and they stopped doing all of the things that we were so diligent about in the past. And, I'm guilty of this too. I'm not saying like, everyone else sucks. Like I suck also. But if you're losing money and you're a marketer and you're not split testing, what have you been doing? And also like, the way I kind of see my business is, 80% of it is bread and butter and 20% of it is experimental, if not more, because my bread and butter is going to get moldy or something at some point in the near future. And so it can't just be, well, but we did this in 2013 and it worked great. Like it's a different ball game. We're not playing, I don't know what analogy I was going to make.
I couldn't agree more. This industry especially is so cyclical, and it's so easy to fall into those traps of just going back to the playbook of what kind of worked before and just kind of trying that thing. But I couldn't agree more. I could talk about how, I'm not a huge fan of a certain type of coverage or, this network spend, but at the same time, I still want to be testing there. I still want to be trying certain things. I think it's very, very important. And it's something that we lose sight of a lot in this industry. And then when we do get onto something again, like the affiliate network, we'll just call it CPA and just act like it was a new idea.
I know.
Yeah, totally. Totally.
Well, that cyclical nature of things, though, I think it's hard for a lot of people to or people weren't expecting, or they don't think about the cyclical nature of it, because we did have such a strong bull market for so long. this time around, that it's like, oh yeah, there's down markets too. And I look back and I'm like, so 2008 to I'd say 2011, 12, right, was a different type of market than after that. And it's not that things didn't sell. It's that certain sectors didn't sell. It's that people had to change what they were selling. So if you had a franchise that was, all Forex, like Forex died in the US after 2008. And I don't know why, but it was, maybe there was a lot of scams. But pre 2008, that was a huge thing. And then it just kind of like evaporated out of the market a little bit in the US. Not that it's gone, but like it wasn't as prevalent as like options took off, And so you look at like after 2008, like John Carter and Simpler Trading, like, really started to grow. And like you had, I remember Sykes started after 2008. I mean, I think he might have had some stuff before that, but like I remember we launched his first trading service back in, I don't know, 2009 or 10 for him. And like he started to work and they started to build that business there. And so like the things that worked before maybe like kind of go away for a little period of time, but the customer doesn't disappear. He just gets interested in different things. He's worried about different things. The messaging changes. The fact that it still blows my mind when I think back to at that time, a $15 million promo was a massive promo. It's still a huge promo right now, but like back then it was like one of the biggest promos ever. And that Clayton had that promo in March of 2009, like shows that like everyone was paying attention. And it's just they're paying, and that's something that Brett Holmes has pointed out. He's like, I'm getting opens, I'm getting, it's just people are paying attention, but they're not ready to buy. And it's like maybe they're just not getting the message about, no one's speaking to where they actually are, and we're still trying to find where are those messages that actually resonate with people. Because they're what is the word? It's not that they're scared, it's that they're uncertain. And
yeah, I think you hit the nail on the head.
And I think that's what like great publisher or great editor does, is he delivers the feeling of certainty about what to do.
Yeah, that's a very good call. I mean, if you like kind of boil our products down to what they are in their essence, it's like I found a guy that I trust, who I know, even if he's not perfect, lets me know that there's like some certainty in future of or I don't know, lets me know that I'm not alone, or maybe that I'm this is just a short-term downfall or something like that. I don't know. It goes back to that trust thing. I mean, and you asked about indicator promos. The companies that I'm talking about that are doing like the trading rooms and heavy telesales type stuff, their promos are either live or look live. So and they're working, So it's funny. I mean, I remember you saying this years ago, John, and me being like, no, that stuff's stupid. Nobody wants that. And you're like, no, when it goes down, that's what happens. And sure enough, it seems to be happening to some extent,
Oh, well, thank you for that. No, I think it's, I went freelance. So I went freelance the spring of 2008 as a copywriter. And so like my whole kind of like the whole genesis of my freelance career, because before that I was working in-house with Clayton, and then I was like, oh, my deal with Clayton had always been, he's like, hey, come work for me. I'll pay you peanuts. I'll teach you how to write. And just when you get good, you're going to leave me and go make a ton of money. And I was about, my daughter was about to be born. It's like, I had time for me to go make more money. And so I left 4 months before she was born in September. And then 2008 hit, and I got a trading client, and like, we were off to the races, because we had like because I remember we had a promo that was a new publishing business. It was a new product. He had no traffic, no list. He had one affiliate, which was Preston James and Brian Keith Foyles at the time. Hey guys, if you're paying attention, guys who come to the summit. And they had like a 25,000 name list at the time that was like solid, like really good, and they were going to promote for it. And I think we had the week between Christmas and New Year's in 2008, or was it 2009? Shit, I might have my years off on that one. No, that's right, because I started, and we did like $250,000. Yeah, because the guy had a real money track record, showing options trading during the crash actually making money. And then that went on to do like $1.3 million or something like that. And then we had a bunch of things after that, but that period of time was like, that was like the Goldman Sachs is a vampire squid article came out in the Rolling Stone. You had all that negative stuff, and people were like, I remember like the Stansberry had laid off like 40% of its people. Like everybody was down, everybody was off. And then on that trading affiliate side, like the mix of education elements, like because people were like, I don't have as much skill as I thought. And so they were buying education products tied to trading services from guys who had real money track records. And as long as we could deliver that, like it was really easy to sell for that 2 years. I remember I only had like, and I'm at the time I thought I was a great copywriter, but I realized now it was just the right fit. I had I don't know, 8 or 9 promos that none of them did less than $1 million at that time, and that was one did like 11. And the only bomb I had was like kind of an investing thing. And it was because we were really good about finding like people who could show, hey, here's my brokerage statement. Like, we actually made money during this period of time. And that kind of proof and credibility really like seemed to win the day, as it were.
Yeah. I mean, it's different. You mentioned early on there's no crypto, there's no weed stocks. So like generating idea it's a big deal. It's a hard thing. And like, I'm a marketer. And so the things that I would normally speak on are more marketing related, but like, that's the most important thing is the idea like that. And anybody can come up with good ideas and anyone can come up with bad ideas. And then how you execute them from a copy standpoint also matters, but it matters significantly more now that there isn't like a weed stocks or a crypto or something like that.
Yeah. And we build franchises around trends. Like you have weed franchises when weed was hot. You have like, and then when the market turns, that franchise is still trying to stay alive sometimes. And it's like, it's not really going to work. And so then it's like, well, what's the new franchise? And I think that's the hard thing is in an uncertain time. It's like, well, what's like, when crypto took off, it was like, oh, well, we could do crypto stuff. When weed took off, we could do, but right now it's like, well, it's uncertain. So
yeah, I feel like that's like the theme of today's talk, right? Is like attention. Is like, where are people paying attention? Like, how are we going to get their attention? And then how are we going to keep their attention?
Yeah. So what about, let's go back to like some more like, maybe more like technical stuff, because I tend to get us off track. Sorry. Like
usually that's me doing that.
Or me.
I just start to post these videos because I like to rant and hope that somebody's listening to me just to make myself feel better. Acquisition methods, right? Like what kind of acquisition methods overall? Like, so we know that subsidized media and co-branded partnerships are working. What else like should people be thinking about right now? What else is working that you see out there right now?
I see a lot of SMS working. Though I know that's I don't know if that's legally risky or what, but I've definitely seen a lot.
Could you elaborate on that?
Like, how do I know it's working?
No, like, so what specifically with SMS do you see working?
Yeah. Oh, building an SMS list. You just have significantly higher engagement rates and a different media to sort of craft a different kind of message on, I think. And it's also, you know, people, because I guess the laws are so stringent, people aren't doing SMS sweeps. And so although I do get like 70 text messages a day from various financial publishers, you know, I still see everyone that comes in. Whereas like email, like I miss those personal ones.
Yeah, no, I used to be one of those guys who my email box was always 0 unread.
Yeah.
And now I'm up to, it just got overwhelming. And now I think my Gmail is 115,000 unread. So I got put on everyone's list. And so I just gave up trying to read everything. And now it's like it's a Twitter feed. I'll miss personal emails and I have to open new email accounts because, and I do have other email accounts within my Gmail just because of that. Like I'll miss emails because if 2 hours goes by, it's pushed to the second or third page.
Yeah. Yeah, it's nuts. Retailers are getting into it. And then on top of it, we're what we've been talking about with sweeps and stuff like that. And so I think like, if it's hard to say anything about acquisition method just because so much of it is dependent upon the idea and the copy and things like that. But what holds true, I think, is that like the experience that you're providing, if it is like genuine, not a bait and switch, not a, you know, let's just get as much, you know, let's spam you or something like that. Yeah, I'm not saying that doesn't work to some extent, but it probably also shrinks our universe. And I think you end up with a lower quality lead on a per mail basis, whatever that means monetarily.
Yeah. Can I back up a little bit on that SMS stuff? Can you tell me a couple things?
Yeah. Sorry.
Yeah. One is the text going to a opt-in page or a straight up offer page?
So you can do anything. I mean,
well, yeah, let's stick with the thing that's working best, or a promo that's really killing it. What are they doing? And then you have to tell me the details other than like, is it going to offer? Or is it going to opt-in directly? Going to offer.
Generally, the SMS is collected after the opt-in anyway, you know, unless you're doing a radio TV campaign where you're saying text money to 555-1212.
Okay, so the funnel then is going to be some other media driver to opt in. You put an SMS in post opt-in or in the opt-in process in order to be able to hit them, drive them back to the offer, just like another channel. So it's another prong of attack in the funnel. And by just adding that piece, it's increasing conversions.
Oh yeah, it's hot. I mean, it's
hot. So I can quote that and say Charles Flagle says this is hot.
Oh yeah, yeah, I'd be happy to say that. And you know, there are a bunch of people who do it really well. I really like what MarketBeat does, and I just
that's a smart dude.
I didn't ask if I could say that. Hopefully they don't mind, but everything they do, I think that they are they're diligent about testing. They're constantly trying new ideas, and I think they're developers themselves. So they're testing some pretty interesting stuff. And
I actually have just as an aside, and Matt, if you're watching, because I sent you an email, I had interviewed Matt, and like I was totally unprepared. And so like I was not happy. I was like, so I said to him, hey, I'm the embarrassing, like, can we do this over again, please? Because I want to make sure. So hopefully he says yes. So Matt,
do it, Matt. They do a really good job of it. They have like this really cool, you know, like subscribe to this ticker, and anytime we have news on that, you'll get it. And I think Benzinga does.
Just the MarketBeat. Like if you just walk through their website, you can just the fit and finishes there as well. Like it's executed very well.
Yeah. Everything tech wise, I always look to them. You know what I mean?
Yeah, like he has a strong developer team, very strong.
Yeah, exactly. Like everything copy wise, I tend to look to like MarketWise or maybe Agora. everything tech wise, I definitely think Market Beat is ahead of the curve. Although, you know, the sales agency team has some really cool stuff, tech stuff going on too.
Yeah.
So, yeah.
Nice. I think that's, I mean, don't you think that that's kind of, I'd almost say like where this entire industry has evolved, and this is maybe just generally in the digital marketing space, but like the level of sophistication across the board has increased, and the amount of like areas that you can become more sophisticated in is kind of increased. And so it's almost like, you know, it used to be like there's a lot of 1 and 2 man bands that could really crush it. I remember like this is way back in 05 when Agora like did, or Early to Rise did the Agora marketing conference with Mark Ford, and it was like $25,000. And I remember like one of the groups, and I think it was David Cross, and I could be wrong, but it might have been David Cross. It was like the early days of PPC. And he was like, basically they had a 5-man team that drove something like $60 million or something crazy like that. It sounded like, if I remember right, and I could be remembering wrong, but I'm pretty sure it was some ridiculous number. And I was like, you probably couldn't do that nearly as easily today with the same team as you could, you know, the early 2000s, just because it feels like, you know, okay, your tech stack is much more sophisticated. Your and like your production quality has to be higher. Your copy has to be better.
Your attention to detail, your segmentation, it has to. And the people who have slept on that because we've had this, you know, nice boon over those are the ones who are losing money now. And the people who are going to, I mean, I haven't been through this or anything. I'm just talking out of my butt here, but you know, the people who are going to survive and come out stronger on the other ends are the ones who are adapting and doing smart things, and not just ham-fisting some junk through and saying, well, this works better than trying to do like a real marketing, or, you know, like, or looking at data and figuring out how to actually optimize this and do it better. And I mean,
how many data points?
Tough.
How many data points do you think you guys are looking at to optimize a campaign? Like if you had to just ballpark it.
I mean, as many as possible, as many as you can, right? I know like pixel placement just is so big right now. If you're
so you're looking at more than 5 things.
Yeah.
Oh, are you kidding, dude? I have 230 dimensions that I like look at. So like
230.
Yeah, but it's not like every day. I'm
Right.
sure Kenny
Still.
and I buy media the same way, but just, you know, I'm a 2-man shop, excluding the editorial team. It's just me and Kelly, and so like,
yeah, but you're not doing the entire publishing business to build it up to $50 million, $60 million.
No, true.
That's not.
Just to speak to that. So we had a call 2-3 days ago, and we just kind of started talking about something, and he just looked at a data point that he had been not paying attention to and pulled something out that kind of, I mean, it reaffirmed to kind of what we thought, but it was still really interesting to see down like that. It's so, yeah, I mean, there's always different ways of looking at the data too. It's pretty interesting.
Yeah, I think that's, I mean, I mean, the whole business has just gotten harder in the sense of like, you have to be better at everything. And so I think that like, and I feel that I have some of the people that I think are just some of the most genuine, best people in the industry who have like some amazing products. Like they struggle with the fact that like, you know, it's a couple of guys with a small team and the product and pitch man, and like they're doing all the things in the business, and they couldn't quite get enough together to be able to hire the people to take some of that marketing load off, to be able to get a more sophisticated media buying team together. Just because they're running so fast, you know, and if it's your income, it's hard to stop getting income for a period of time in order to staff up or whatnot. And so anyone who didn't take advantage of the boom in COVID kind of missed an opportunity to kind of like step up a level, I feel like. And that's not a great thing to have to say now after the fact when that moment is past. But
and now you're seeing a lot of those people cutting more staff, right? So I mean, that aren't making it now are losing good people, you know, across the board. So that's, you know, that's not going to make it that much easier to level up now.
Right.
Yeah, totally. If any, I mean, it worries me so much, but partnerships, baby. I mean, that's what it's for. I mean, if that is your problem, hit me up, and we will figure something out. I guarantee it.
That's
Probably.
awesome. No, I think that is partnerships, JVs, like that is the thing that can like stabilize people who are in a bad spot or help move something up. And so I might tend to over JV myself sometimes, but I think that's just more of I'm a very social kind of operator, and so that's my own thing. But from a traffic standpoint and from an acquisition standpoint, and like I think it'd be foolish for anyone not to. Like everybody from the biggest on down, like you said, market wise, they're basically doing a co-branded acquisition internally across all their divisions. And like, if all the biggest groups are doing it and all the people who are like kind of like the sharpest, like, and you're not doing it, then it's something worth looking at, because you're paying less per acquisition than you would be on your own.
Right.
And if it's even if it was a little bit less, but from what you're saying, it sounds like it's as good and possibly even better in some cases than doing it on your own in terms of conversion, at least over a shorter period of time. So it seems foolish not to.
Yeah, I think across the board, collaboration is going to be so important moving forward. Let specialize in what you're good at, and let someone else specialize in what they're good at, and working together like that. I think that's going to be the future of a lot of these, from the top down. I really do. Yeah,
and I think things. I mean, like, I love to be able to talk to you guys here, because from my perspective, like, I'm not a media buyer. I'm not at all sophisticated in that sense. And so like, to even try and keep up with what's changing is like, I don't even have the time in the day to even make the attempt. And so like, I think that's true for a lot of folks in the business who have companies. And so like, being able to partner or JV with you guys in different ways, I think allows people to keep at the front edge of what's working. Have somebody who has the sophistication and the skill set to actually acquire for them at scale, without having to build a staff internally right now, or without having to spend the money to figure it out. Like, that's I mean, learning media buying by spending money poorly is probably the worst, most expensive lesson you can get.
Yeah. Oh yeah. Yeah, what I always say, and like, you guys know this, is like, what are your problems? Write them down. Who are the people who do them best? Write them down. Reach out to every one of them. No, maybe there are some jerks out there, but like, for the most part in this industry, everybody is pretty friendly, I would say, and open, and they probably have a problem that you can help solve. You know what I mean? And get creative. So like, there are these co-reg widgets that people buy from out there. There's After Offers, IMS. Now there's a Smart Co-reg, which is a sales agency thing. And like, what I'm seeing these guys do is come up with brand new functionality just to solve one person's problem who might be spending $5,000 a month or something like that. Like something, yeah. I mean, it's what I've seen. There's a girl, Carrie McNally, who's running this Smart Co-reg thing right now, and she's like a ninja. I don't know. She's just it's a cool software, but she's making this Co-reg widget basically do all kinds of stuff that I've only dreamt of before. So and that's just an example. That's somebody changing their software to fit a use case for somebody who needs it,
Yeah, no, that's great. And that is one of the coolest things about our industry, is that it is like, everyone's open and collaborative and willing to share information. And I feel like for most of the industry, there's some people who are not, but for most of the industry, like, the deal making like appetite among competitors, or people who you think are competitors, is huge. Like, everybody does business together. Everyone likes to do deals together. And in times like this, when like, it's kind of like, affiliate offers. If you don't have stuff that's converting, and somebody comes up with a really high converting offer and you can optimize for cash flow by like promoting that offer, like that just, it just makes sense in the short term, especially. And
I think
people
you
love
deserve a
doing
lot of that.
business.
You deserve a lot of that credit too, John, with what you do with FMS. Seriously.
Thanks, man.
Before that, you would just try to emulate whoever was doing well, right? You would just, you would just kind of take that and just basically rip it off, right? And there was not a lot of talking in the industry. And then with FMS, people started connecting. It was a more open forum, and you guys really even adjusted FMS, right? I mean, you saw that, oh wow, connections are being made here. Let's kind of cater to that. And that's been a big evolution in the industry.
Thanks, man. I appreciate that. Yeah, that worked out pretty well. So I appreciate that. Yeah, no, that's definitely, but I mean, the thing that when people come from outside the industry and they come to FMS for the first time, that's one of the common comments I get is like, but everyone's just like sharing what's working for them and like willing to help. And it just seems weird to people that everyone's so willing to help someone who should be a competitor, but I don't know. It's a cool part of our culture. It really is. As an industry, it's a really cool part of our culture to collaborate that way.
Yeah, totally. And like Kenny said, it's guys like you who do set that tone. And I think it's something that I appreciate about it. No, you're not.
I know.
I can see you. No, I'm just kidding.
But okay, so like, so you're both doing the co-branded funnels. If somebody's interested in kind of connecting with you guys, I'm assuming you guys, it sounds like you're pretty open to anybody just like having the conversation on stuff. What else are you guys up to? What do you want to put out there for everybody?
So I've had a 15-year career with I Know, which recently just ended on great terms. But so I'm open. I'm kind of doing some contracting, some consulting, looking at people's funnels, looking at just really open to kind of helping better some of these things that for people so close on a lot of fronts. So just hit me up on LinkedIn. I'm easy to find there.
Hit me up. Anybody who can't find Kenny, I will directly connect you. That's awesome. Like you haven't been on the market for a very long time.
Yeah,
I do work with people.
Dude, I offered him too. As soon as I heard, I was like, "You want to come work with me?"
Yeah. So it's great. If I do find somewhere to land, and I'm kind of looking around, but if I do another 15-year stint, I want that to be the right place, and that to be my last 15-year stint. So in the meantime, man, I'm really loving connecting with everyone and helping everyone. So
killer. Yeah. So if anyone has any media buying questions or issues that they want to just kind of explore, I guess you guys are open.
Yeah.
Cool.
Yeah, and then for me, it's same old. I don't really have anything to push. I really want to get creative with how we're doing co-reg and co-branding and things like that. So like, and I am doing that. Austin at IPM has been really good, and Katie at Stansberry has been really good about helping test some stuff out. But we're figuring out new ways to generate leads and new ways to monetize those leads. And for me, it's a learning game, and I'm happy to share whatever intel I get, and just very grateful to have you guys to ask me to do this.
Awesome. Thanks, man. I really appreciate you guys coming on and spending the time with me. I think it's been like, that was my big push this year, is like, I'm going to make myself like actually like have these conversations for everybody, because like it's another thing. Like FMS is once a year. There's so much happening so fast, and there's so much knowledge in our space to be able to share it. So I appreciate you guys coming on and sharing it, and also your willingness to just do the deals, man. That's kill. All I can do is like, hey, you should meet this guy, but you guys have to actually do things, and you do things.
Yeah. Oh, let me say one quick thing real quick. Anybody who's not in financial publishing who is watching this, I would bet that financial publishing has better marketers than what you've got, and let's partner up. Like, let's actually get get to brass tacks in partnering up with some of these companies who are in like the fintech space or anything like that. Like, I'd love to show you that that we're very good at what we do. And
don't worry, there's
yeah,
I see that opportunity is massive, because that, you know, just throw this in here at the end for those few of you who are listening all the way through to us. One of the places where people are still spending money is VC backed fintechs, especially if it's a B2B fintech, but like capital markets tech, wealth tech places, like they got money and they're spending because they have to, like so like the people who were raised before the downturn have a bunch of money that was raised to prove that they could scale. And so like that fintech area, there's a lot of opportunities, a ton of opportunity there. And I have a whole big push, like, so Vince and I over at FinTech TV are going to be doing some stuff. And we're going to try and open up like the conversation between like the broader fintech world, because he has like, even just his guests are that he has like the B2B side, like he has the founders and he has the VCs and he has all those folks over there. And so we want to bring those guys into conversation with you guys in our space here, because you have like you said, like the sophistication of the marketing, the digital distribution to investors that we've managed to build in this industry is phenomenal. But then also like the skill set of how to engage them, because everyone else is doing, you know, there's a SaaS playbook, right? And people follow the SaaS playbook, but like there's this whole other layer of like, once you start talking to investors, like your ability to engage them. So even the content strategies that we have over here applied in different segments over there is, I think, it'd be game changing for a lot of folks. And so like, I think that's one of those, like, I think of our industry as a defined industry. You think of like all these other defined industries that are kind of like one step over from us, and kind of the same way. And now I'm getting into my weird biz dev theories, but if you want to see where like the money is, where the money like generate the new exciting kind of opening of new revenue sources and cash flow is, and new business opportunities is you look at the white space between industries that are ancillary. So like when we started FMS, you had trader education here, investment newsletters here. They didn't really talk. Putting them together, like FMS was a bridge that put them together, and that created an explosion of opportunities because we could share information. Media buyers and sellers could contact multiple sides. You know, we put that together. And then a lot of the other work that I've done over the last several years has been, okay, well, how do I create bridges to, you know, the public company world that spends a ton of money on IR? How do I build bridges into fintech? How do I build bridges? Because when you take what we have and you put it together with those industries, whole new things and whole new opportunities emerge, and money flows in different ways. And so that's kind of like that's really the essence of how I approach like my event models in my head, is look for that white space. And so right now, like you can see the fintech world and our world are starting to gravitate together. Yeah. And that's going to create a ton of opportunity on both sides.
Yeah, I agree with that. I mean, that's what I'm saying. Bring it.
Bring it.
Yeah, I want that.
All right. Well, sweet guys. I appreciate this. This has been awesome. So thanks for doing it.
That was fun. Thank you for having us.
Yeah, thank you guys.
Cool. All right. Have a good one.